Well, we had a lot of big news this week, and stay tuned for the end because we're going to be talking about home ownership rates and why Black Americans have the lowest home ownership rate in the country, and some of the areas that actually have the least delta between percentage of population and then percentage of home ownership. Pretty interesting numbers there, and we'll get into that. Let's get into the housing market report for this week. A lot happening in the periphery of the economy, but not a lot of movement as far as rates go. So let's look at the big three. First, prices. Prices are steady. Inventory is up again. And then rates are sideways this week. Not a lot of economic news that really moved the market. The one big, beautiful bill didn't make that big of an impact. It helped rates go down a little bit on Monday, but there was also a Treasury auction that helped as well. Some of the headline news: the Honolulu housing market picks up. We had the HBR report come out for the month of June, so we'll go into that. Rates were up, but not that much. And then Black home ownership rate is lowest in the nation. This coming from a report by the Lending Tree. We'll get into that. And then I want to talk about who should not buy a home. Sometimes feel like I am telling everybody to buy a home, but there are some people who should not. We'll talk about that at the very end. Let's get into the HBR report for the month of June. You can see that home prices are steady. Median sales price still above 1.1 at 1.125 for single family homes, and the condos down. Median sales price up from 500 to 510,000. So really right around that 500,000 range. You look at the year over year, we saw a 12% increase in single family home sales and just almost a 0.1% increase for condos. But again, let's look at recent trends. We'll look at the monthly indicators. June, I tell you what, you saw some life in the single family home market. A lot more sales, 23% more sales in June than in May for single family homes. Condos down 4.3% though. Home prices are steady. We kind of saw that in the last slide, but home prices are steady. Median days on market actually up for both single family homes and condos. Just showing because you have such a large number of single family homes and condos, while we're selling more, there are still a lot on the market. Median days on market up to 24 days for single family homes and up to 40 days from 39 for condos. We have pending home sales. Our pending home sales is basically homes that are in contract. Those are the ones that are going to close in July. Those are the ones that are going to close in August. And they were down month over month for both single family home and condos. So could this be a short-lived spike in the housing market as far as sales go? Hard to say. Really, that's something to look forward to. Months of supply is still steady for both condos and single family homes. Single family homes are at 3.7 months of inventory, and then 7 months for condos. Down a little bit for condos, but still elevated at 7%. These numbers show that despite high rates, homes are still selling. Homes are less affordable now than they have ever been. How are people buying homes? That's what we're going to talk about a little bit here. Looking at some of the indicators here, new listings, elevated number of new listings again for the the fourth month in a row, and 5th out of 6 months we had over 1,000 new listings come on the market. But you look at the difference, we had the most number of single family homes come on the market in 3 years. So almost 400 new single family home listings in the month of June. All right, that shows that people want to sell. They're trying to move. They're trying to move on to, I'm sure these are a lot of veterans I know, and they got to move. They're up for orders. School is out. They're looking at moving, towards the end of the summer season. But you did see a big drop in condo listings for the month. But really, hey, big news on new listings. Again, another month over 1,000. That's pretty impressive. Let's look at active inventory. Again, we have more active inventory now than we had before COVID. Really, we have more active inventory now than we have had in the last 10 years, folks. And you can see condos have kind of steadied out. Single family homes, though, a slow but steady rise in active inventory. 10-year highs for both. Now, I will tell you this. How are people buying homes when the prices are so high and the rates are so high? I'm telling you what, credits. 7 of my 10 purchases over the last 2 weeks, maybe 3 weeks, all are receiving 4% or more seller concessions. That is, 4 of them have $40,000 seller concessions. That is allowing them to lower their rate, whether it's a permanent or temporary buy down. It's allowing them to pay their closing costs. It's allowing them to pay off credit card debt. I'm telling you, people who are selling their homes, some of them have a lot of equity. All right, if they've owned their home for more than 5 years, they have a ton of equity. So they can afford to give up a little to get their home sold. And that's what we're seeing. Again, this high active inventory bodes very well for buyers. And I tell you what, if you're a first-time home buyer, this is your chance. I have a 1% conventional down payment program. All right, my lender is going to basically pay the other 2% for a first-time home buyer, up to, really, you're looking at around a $350,000 to $400,000 purchase. But looking at that, you get a 1% down payment. All right, and again, this is your first home. You're not looking at your forever home. 1% down payment. Sellers are going to pay your closing costs. They're going to help you buy down that rate. They're going to make you a homeowner with 1% down. And you're going to have an affordable mortgage payment. That's important. You don't want to be a house poor. Affordable home payment. Your home. You're not paying your landlord. You are building generational wealth. It takes one step at a time. Your first step is buying your first home. Woo! I got liquored up on that one, man. I'm excited about that because this inventory shows that buyers have options. All right, let's look at closed sales. We got a summer rebound in closed sales. All right, look at that graph. Look at it going up from February through June. You see number of closed sales for single-family homes going up. Really, the highest number of closed sales since October of 2024. All right, and what happened in October of 2024? That was basically the result of interest rates dropping into the 5s for VA loans. All right, really from like August, July, and August. All right, we saw a lot of purchases. All we need is rates to go down a little more. We're talking about, a half a point more, and it's game on for buyers. Sellers get all excited. All right, you're still gonna be given credits, but it's a half a point is all we need, and the market picks up. All right, I just wanted to show you that. Look at that big jump. Look at that big jump for single-family homes. And median sales price. I don't normally show this graph. I show a different one, but I just want you to see that despite interest rates being high for the last 3 years, look at the median sales price for single-family homes. We are largely between $1.1 and $1.2 million. Condos really steady in that $500,000 range. Again, when we see rates drop by just a half a point, you are going to see these median sale prices go up. Not going to spend up too much more time on that one, but let's think about this. Sellers are helping make your home affordable, your home payment affordable. Well, not only that, the other benefit to having an affordable mortgage payment is the tax benefits. All right, maybe you're buying down points that the seller's paying for. Well, guess what? Those points that you're paying, those are tax deductible at the end of the year. If you're a VA and you're paying a funding fee, tax deductible at the end of the year. And you get any interest that you pay, tax deductible at the end of the year. You get nothing back on your rent. Nothing, nada. You get nothing back when you pay that landlord his rent. When you pay government housing, all your BAH, what do you get back? What's your benefit at the end of the year to help bring your taxable income down? Nothing. All right, that's why you got to get started. All right, great report, I think, for Honolulu Board of Realtors for the month of June. Shows the market is stable. Let's get into VA rates. All right, good week so far. All right, I'm talking to you. It's Thursday. In the absence of any really big economic news, steady is positive. All right. Usually when there's not a lot of economic news like inflation or jobs, we see anybody who chirps up causes interest rates to go up. We haven't really seen that. Next week is inflation week. We have CPI, Consumer Price Index, Producer Price Index. All right, that's going to be a big week. But you know what? The economy still has a say. All right, what we're doing with tariffs will still have a say. And most of the news has been positive this week, so we'll see what happens next week. But that I will take this week. All right, I just don't want to see rates popping up on us. We need some good we need some good inflation news next week. That might get us back down close to 6% on VA. All right, so what does this mean for buyers? Hey, mortgage apps are up. Again, this is the summer selling season, summer buying season. Inventory is the highest that we have in Oahu in 10 years. And people are buying homes. I don't do just VA. I'm doing a lot of non-QM, so different types of mortgages, because buyers have money. They're sitting around. They know that real estate is a good investment over time. 8 contracts in the last 2 weeks, 7 of 9. All right, have 4% or more in seller credits. Again, that is big news. If that isn't ringing the bell that you should be buying a home or at least looking into it, you know what? You don't want to own a home. Conventional 1% down program is money. It's free money. You don't have to pay that back. That's better than the program I had last year. So really good program. I'm looking forward to helping a lot of local first-time home buyers with that. Hey, now is the best time to buy, but you got to do your homework, and we're going to talk a little bit about that. Summer for sellers. Hey, summer season's picking up. All right, that's good news for you. Demand is pent up. All right, you can't wait for the rates to come down. If I didn't have to put my house on the market now, quite frankly, I wouldn't. All right, I want to hold on to that home as long as I can. And trust me, I sold a home right as the market was turning. I wanted to sell it. I felt I had to sell it. Big mistake. If I would have held that home for another year, I would have made another $100,000 to $150,000. If I would have waited 2 more years, $200,000 more. I sold at the wrong time. It's like buying your stock at the high and then selling it at the low. All right, don't do that. If you can, and you really got to think outside the box, maybe adjust your budget, but don't sell at a loss. Figure out a way to keep it. That's all I got to say about that. Now let's get into the news that really that caught my eye. Well, a couple of different things here. So talked about this before. All right, Black are 1.7 times more likely to be denied a mortgage. Let's break this down. So this is a Lending Tree survey. It's based off the 2023 census. 19% of all applicants, Black applicants, are denied, compared to 11.27% for all applicants, period. That is a pretty big number. I mean, to think that nearly 1 out of every 5 Black applicants is turned down. What is the problem there? Why is that happening? Well, some of the reasons that are discussed in this report: limited generational wealth. If you're a family, you don't come from a family of homeowners. I did not. It's harder to even believe that you could buy a home. You got to see it to believe it. And if you don't see it in your family, it's not as likely that you're going to see it. So you don't have that generational wealth. You don't have families that have grown up in one home. All right. You just don't have that. Income disparities. I forgot the average income for, I don't have the exact numbers, but Black Americans is about 52, maybe 56,000. White Americans is $76,000 or $78,000 a year. Big income disparity. Discriminatory practices. I'm not going to say they aren't out there. We know they're out there, but we got to be vigilant. And whether you're Black, brown, whatever, if you feel you're being discriminated against, man, you gotta report that to the Department of Housing and Urban Development. If you don't qualify for the same reasons that anyone else won't qualify, well, then you got to fix that. But hey, there are discriminatory practices. And for me, I think education, all right, the financial education that we do not receive in school, in our public school system, all right, that is failing us as well. I'm doing a financial literacy course at my church, and I got this for young adults. Hey, you know what? It's amazing what we don't know, because maybe our families don't have that education. They don't know enough. I just helped a young African American. He just bought his first home. I was talking to him, and I talked about this last week. First time home buyer in his family. So proud of him for buying a home. And you know what? I don't really look and see who's what race or whatever when I'm looking at applicants. I don't. I will tell you this. I have a lot of minority applicants who buy homes. A lot of them are veterans. Where's the playing field leveled the most? I do think it's in the military. There's some issues with that overall, but in the military, you know what? We all get a VA loan. We all get, VA home loan benefit. All right. Now it's just about, all right, how do we educate? Because here's some of the things. The education piece is important, but knowing you have an incredible benefit is also very important. And that's one of the reasons why I educate on the VA home loan benefit, in addition to doing financial literacy. Kind of what are the reasons why applicants are being denied? Well, the number one reason is debt to income. We already talked about the income disparity. That's the number one reason. Credit history was the next biggest reason. 24.85% of denials were because of credit history for all applicants. 33%. 33.16% for a black applicant, almost a 9%, a little over 8% difference in the denial because of credit history. Again, that goes back to education. That goes back to examples being set. My credit history was terrible. I won't blame anybody for it. Ultimately, it falls on me, but I really didn't know any better. My first credit card I got, I just thought that was a permission slip to max them out, and I did it. I just didn't know any better. I joke around. Actually, it's not really a joke. First time I asked about credit was with my dad. Saw the MasterCard bill on his desk. I said, "Hey, Dad, can you explain credit cards to me?" And he's like, "If you touch it, you pay it." I never touched it. I picked up my Larry Bird basketball and went to the basketball court. So that was my education in credit. Good news is the gap is getting narrower, but still, again, a lack of education persists. Here's this national home ownership rate, 65.2% of Americans own homes. I think that's a high number. I mean, obviously I'd like it to be higher, but that's higher than what I expected. 44% though, 44.7 for black consumers, 72.4% white, 63.4% for Asian, and 51% for Hispanic. Again, we got to bring these numbers up. Where do you have the least amount of disparity? Hey, the 3 California metros lead the way. One of them is my old hometown, San Jose. All right, 3 California, Fresno, San Jose, and Riverside have the smallest difference between the share of homes owned by black people and the share of the population that's black. So California really leads the way in black home ownership. So how is that? All right, what are they doing right? All right, we can bust on California all day long, but they're doing something right. My next question is, what are their mortgage delinquency rates amongst all the different races in California and across the nation? They're still historically low, but where are they? Are we going beyond what applicants should be qualified for? Are we putting them in a situation, home buyers in a situation where they're going to be house poor, where they're set up to fail? That's a big question. I'm a homer for home ownership, but I'm a homer for not being house poor. That's my take on that. I know I spent a little bit of time on that, but it's super important. We got to know what's going on in our country, and home ownership is the key to generational wealth. Homes are expensive right now, but it is still the key to generational wealth. All right, now I always talk about you should buy a home, but there are some people who should not buy a home. Who should not buy a home? If you can't pay your bills on time, you shouldn't buy a home. If you don't budget, you shouldn't buy a home. If your income is not stable, you shouldn't buy a home. If you have less than 2 years, and I would say less than 3 years remaining in your location, all right, not just Hawaii, then you probably shouldn't buy a home because it's a lot risky. You ask anybody about a home 2 years ago who thought, oh yeah, I'm gonna flip this home in a couple of years, I'm out. Well, those guys are hurting. Now we're at 3 years, all right? But that does not mean you should never buy a home, all right? Hey, start paying your bills on time. Start budgeting your spending. Get job stability, and then put the marker down at your next duty station, or at the next place you're going to live to become a homeowner. You know, and for me, when I talk about this in my seminars, at the beginning I ask, what is your legacy? Why do you want to buy a home? You got to have a good reason to buy a home. All right, you can't. If your reason is I want to buy a home because my buddies are buying a home, that's not a good enough reason. All right, you got to have a strong why. Your strong why really drives you to the solution of home ownership. You're going to do what you have to do. When I really put my family first and said, I got to buy a home, I got to establish this home for my family, and that's when things changed for me. All right, and it was that first home that set me up for the next home and the next home after that. All right, that's all I have for you guys this week. Again, I hope you got something out of this. Please like, comment, subscribe, share with somebody who you think may benefit from some of this information. All right, that's it. You guys have a great week. Have an awesome weekend. Aloha.